The $150 versus $30 question. Silver just sparked something massive. Silver just triggered something massive. And most people have no idea it already started. Right now, as you watch this, silver is sitting above $80. It moved fast, it moved hard, and then it didn't pull back. It held. Every time silver did this before, something much bigger followed. 2011, 1970s. The people who saw it early never forgot it. The people who waited never stopped regretting it. So ask yourself one question. Are you early or are you already too late? Welcome to the hidden currency. Now listen. If you have made it this far into this video, you are not here by accident. Think of this channel like that one wise friend, the one your family always called before making a big decision. If you don't have that friend yet, hit subscribe right now. Consider it done. And before we go any further, I want to know something. Where in the world are you watching this from? Drop your city, your country right down below. Because this conversation is happening everywhere and I want to know who is in the room. There was a man named Robert. He was 67 years old, retired, and had spent his entire working life as an engineer in Ohio. He was not a Wall Street trader. He was not a hedge fund manager. He was just a regular man who had worked hard, saved carefully, and trusted the system. One evening in early spring, Robert sat at his kitchen table with a cup of coffee and opened his laptop. He was checking his savings, his pension, his investments, and then he saw something that made him stop. Silver had crossed $80, and it was not coming back down. He called his son. His son laughed and said, "Dad, silver always does this. It goes up and then it crashes. Just wait." Robert nodded. He closed the laptop. He went to bed, but he could not sleep, because something in his gut told him that this time was different. And Robert had learned, after 67 years of living, that the gut does not lie. Here's the thing that most people do not understand about silver. Silver is not gold. Gold moves slowly, quietly, like an old river, but silver moves like a storm. It is fast, sharp, and aggressive. When silver goes up hard and fast, it almost always comes back down just as hard and just as fast. That is the pattern. That is what history shows. That is what the textbooks say. That is what the experts expect. But right now, something is breaking that pattern, and that is exactly what should be making every single person pay attention. Silver moved from the high 70s into the low 80s in a very short period of time. That kind of move is called an expansion, a wide, fast, aggressive expansion. And when silver does that, the market usually breathes. It pulls back, it cools down, sellers come in, prices drop. That is the normal cycle. That is how it has always worked. But this time, after that big expansion move, silver did not pull back. It did not cool down. It held its ground. It sat right there above $80 and refused to fall. That one behavior changed everything. Think of it this way. Imagine a boxer who throws a powerful combination of punches. Normally, after throwing that hard, he steps back, catches his breath, resets his stance, and then goes again. But imagine if that boxer threw the combination and then just kept standing right there, strong, balanced, not breathing hard at all. You would stop and think, this man is not tired. This man has something left. And that would tell you something very important about the fight. Silver right now is that boxer. It threw a big move. And instead of stepping back, it is standing there, strong, above $80, showing no signs of exhaustion. And the people who truly understand markets, the ones who have been watching silver for decades, are looking at this and asking a very serious question. Why is silver not breaking down? Because here is the honest truth. Based on how silver has behaved for the past 40 years, it should not be sitting above $80 right now. It should have pulled back toward 70, maybe even lower. That would have been normal. That would have made sense. But normal is not what is happening. And when markets stop behaving the way they are supposed to behave, it is never random. It means something has shifted. Something underneath the surface has quietly changed. And by the time most people figure out what that thing is, the move is already over. Back at his kitchen table, Robert opened his laptop again the next morning. He started reading, not news headlines, not social media posts. He started reading actual data, reports from the U.S. Geological Survey, information about industrial demand, solar energy production numbers, electrification projects. And the more he read, the more a very clear picture started forming in his mind. Silver was not just moving because of speculation. It was not just traders pushing prices around. There was something real underneath this move, something connected to the physical world, to factories, to technology, to energy, to the actual global economy. And that is when Robert understood what his gut had been trying to tell him the night before. This was not a normal silver spike. This was something that had been building quietly for a long time. And now it was starting to show itself, slowly, structurally, like a bridge that has been under construction underground for years and is now finally beginning to rise above the surface for the world to see. The only question left was this: how many people would see it in time? There is a small town in Nevada called Elko. Most people have never heard of it. It sits quietly in the middle of the desert, surrounded by mountains, far away from the noise of New York and the chaos of Wall Street. But Elko has a secret. Beneath its dry, cracked ground lies one of the largest silver and gold mining regions in the entire United States. And the people who live there, the miners, the geologists, the old families who have worked that land for generations, they know things about silver that no television analyst will ever tell you. One of those people was a woman named Clara. She was 71 years old, small in size but sharp in mind. Clara had grown up watching her father work the mines. She had watched silver crash in the 1980s. She had watched it explode in 2011. She had seen the excitement, the greed, the panic, and the silence that followed each cycle. Clara had lived through all of it, and because of that, very little surprised her anymore. But something was surprising her right now. Every morning, Clara would sit on her front porch with a notepad and write down the silver price before she did anything else. It was a habit she had kept for over 30 years. And for 30 years, she had seen the same patterns repeat themselves over and over again. Silver goes up, silver comes down, traders celebrate, traders cry, the cycle continues. That was the rhythm of her life, and she had made peace with it long ago. But when silver crossed $80 and simply refused to fall back, Clara stopped writing in her notepad for a moment. She looked out at the mountains. She thought about what her father used to say. He used to say that silver speaks before it moves. Most people just do not know how to listen. Clara had spent her whole life learning how to listen. And right now, silver was saying something she had not heard it say in a very long time. It was saying that it was not done. Now here's what makes this moment in history truly different from every other silver rally people have seen before. In the past, when silver moved higher, it was mostly driven by one thing: speculation. Traders betting on prices. Investors looking for a safe place to put their money during uncertain times. That kind of demand is emotional. It comes quickly, and it leaves just as quickly. The moment fear disappears, the money moves out, and the price collapses. That is the old story of silver. That is what happened in 2011 when silver hit nearly $50 and then crashed back down hard within months. But this time, underneath the price movement, something completely different is driving the demand. And it has nothing to do with fear or speculation. It has everything to do with the physical world that every human being on this planet now depends on. Solar panels need silver. Every single solar panel that is installed anywhere in the world uses silver inside it. And right now, the world is installing solar panels at a speed that has never been seen before. Governments are pushing clean energy. Countries are building massive solar farms. Homes are adding panels to their rooftops. Electric vehicles need silver in their circuits and their charging systems. Medical technology needs silver for its antibacterial properties. Defense systems need silver in their electronics. The demand coming from these industries is not emotional. It is not based on fear. It is structural. It is permanent. And it grows every single year whether silver prices go up or down. Clara understood this better than most because she had watched the mining side of the equation for decades. And she knew something that the people buying silver in the cities did not fully appreciate. Getting silver out of the ground is not easy. It is not fast. You cannot simply decide one morning that you want to produce more silver and have it ready by the afternoon. New mines take years to develop. Existing mines are producing at their limits, and some of the richest silver deposits in the world are becoming harder and more expensive to extract. So here is the simple picture that was forming. Demand was growing, supply was tightening, and price was holding strong above levels that historically would have triggered a massive sell-off. Clara sat on her porch, picked up her pen, and wrote 3 words in her notepad that morning. Something is different. She underlined it twice. Then she picked up her phone and called her grandson who lived in Chicago. He was 28 years old, worked in finance, and thought he knew everything about markets. Clara told him to listen carefully. She told him what she was seeing. And for the first time in a long time, her grandson did not argue back. He went quiet. And that silence said more than any chart or analyst report ever could. There is a building in Chicago that most people walk past every single day without giving it a second thought. It has no big sign outside. It has no flashy logo on the windows. It looks like any other office building in the financial district. But inside that building, on the 14th floor, a small team of data analysts spend their days looking at numbers that the rest of the world never gets to see. They track commodity flows, they monitor trading patterns, they study the invisible movement of money across global markets, and most of the time, what they find is exactly what they expect to find. But on a Tuesday morning in early spring, a young analyst named Daniel found something he did not expect at all. Daniel was 29 years old. He had graduated at the top of his class, earned 2 degrees, and landed what most people in his field considered a dream job. He was precise, disciplined, and extremely good at spotting patterns in complex data. His colleagues described him as someone who did not get excited easily. He was the kind of person who looked at numbers the way a surgeon looks at an X-ray. Calm, clinical, focused only on what the data is actually saying. So when Daniel leaned back in his chair that Tuesday morning and stared at his screen with wide eyes, the colleague sitting next to him immediately noticed. She had never seen Daniel react to anything that way before. She rolled her chair over and looked at his screen. Then she looked at him. Then she looked at the screen again. "Is that real?" she asked quietly. Daniel nodded slowly. "I have checked it 4 times, he said. "It is real." What Daniel had found was a pattern inside the silver trading data that technically should not have been possible given where prices were sitting. When silver trades above certain price levels, large institutional players, the big banks, the hedge funds, the major commodity traders, they typically begin reducing their positions, they take profits, they move money into safer assets, they wait for the price to cool before they come back in. That is standard behavior. That is what the data had always shown for decades. It was practically a law of the market. But the data Daniel was looking at showed the opposite happening. Above $80, instead of large players reducing their silver positions, they were quietly adding to them, not in a loud or obvious way, not in a way that would attract attention or trigger news headlines, but steadily, carefully, and consistently. Day after day, the same pattern was repeating. Big money was not running away from silver at these prices. Big money was walking toward it. In the world of commodity markets, this kind of behavior has a name. It is called accumulation under strength, and it is one of the rarest and most significant signals that experienced market watchers look for. It means that the people with the most information, the most resources, and the most at stake are not concerned about the price being too high. They believe the price is going higher still, and they are positioning themselves accordingly before the rest of the world figures it out. Daniel printed the data, put it in a folder, and walked straight to his supervisor's office. His supervisor was a 54-year-old man named Frank who had worked in commodity markets for nearly 3 decades. Frank had seen everything: silver spikes, silver crashes, gold runs, oil shocks, currency crises. Very little moved him anymore. But when Daniel placed the printed data on his desk and Frank spent 5 minutes studying it carefully, something shifted in Frank's expression. It was subtle. But Daniel caught it. A small tightening around the eyes, a slight pause before speaking. Frank looked up from the papers and asked Daniel one question. "How long has this pattern been running?" Daniel told him it had been building quietly for several weeks. Frank nodded slowly, looked back down at the papers, and then did something that Daniel had never seen him do before during working hours. He picked up his personal phone, not his work phone, and sent a text message to someone. Daniel did not ask who. He did not need to, because the fact that Frank reached for his personal phone instead of his work phone told Daniel everything he needed to know. Whatever this data was pointing toward, it was not something Frank wanted to discuss through official channels. Daniel walked back to his desk, sat down, and looked at the silver price on his screen. It was still sitting above $80, still holding, still refusing to break lower. And now Daniel understood something that he had not fully understood when he woke up that morning. This was not a market moving on emotion. This was a market that already knew something, something that had not yet been announced, something that had not yet reached the news, something that was still sitting quietly beneath the surface, growing larger and more powerful with every single day that passed. And the most unsettling part of all was this. If the big players already knew and they were already positioning, then by the time the rest of the world found out, the easy money would already be gone. The only question that mattered now was a very simple one. Which side of that information were you on? 3 people, 3 different lives, 3 completely different corners of the world. Robert, the retired engineer in Ohio who could not sleep. Clara, the sharp old woman in Nevada who had spent a lifetime listening to silver speak. And Daniel, the young analyst in Chicago, who had just found a number that should not exist. None of them knew each other. None of them had ever spoken. But all 3 of them, on the very same week, had arrived at the very same conclusion through completely different paths. And that kind of convergence, when different people with different backgrounds and different information all arrive at the same answer independently, is one of the most powerful signals that exists in any market, in any economy, in any period of human history. It means something real is happening. Now here is where the story takes a turn that most people are not prepared for. Because what Robert, Clara, and Daniel had each discovered individually was not just about silver. It was about something much larger, something that had been building quietly inside the global financial system for years. And to understand it properly, you have to go back. Not years, not decades. You have to go back to the very foundation of how modern economies are built, and why certain assets behave the way they do during specific moments in history. Every major economy in the world is built on confidence. Confidence in currency, confidence in governments. Confidence in the systems that move money from one place to another. And for most of the past century, that confidence held. People trusted the dollar. People trusted the banking system. People trusted that the numbers on their screens and the balances in their accounts represented something real and stable. That trust was the invisible glue holding everything together. But trust is a fragile thing, and over the past several years, quietly and without much public discussion, that trust has been developing small but very significant cracks. Government debt levels across the world have reached numbers that were considered impossible just 2 decades ago. The United States national debt has climbed to levels that serious economists describe as historically unprecedented. Central banks have printed money at speeds that would have shocked financial experts from any previous generation. And the cost of basic necessities, food, housing, energy, has risen in ways that ordinary working people feel every single day in their real lives, even when the official numbers try to paint a different picture. This is the environment that silver is sitting inside right now, and this is why the behavior of silver above $80 is not just a trading story, it is an economic story, a story about what happens when the physical, real, tangible world begins separating itself from the paper, digital, artificial world of numbers on screens. Throughout all of recorded financial history, when that separation begins, when real assets start moving away from paper assets, silver has always been one of the first things to signal it. Not because traders decided to buy it, but because the system itself pushes value toward things that cannot be printed, cannot be created from nothing, and cannot disappear with the click of a button. Clara knew this from living it. Daniel could see it in the data. And Robert, sitting at his kitchen table in Ohio, felt it in the way only a man who has lived 67 years of real life can feel something true. On a quiet Saturday afternoon, Robert made a decision. He did not make it out of panic. He did not make it out of greed. He made it the way he had made every important decision in his life. Slowly, carefully, after thinking about it from every angle. He called his financial advisor and asked one simple question. He asked what percentage of his portfolio was in anything physical, anything real, anything that existed in the actual world, and not just as a number inside a computer system. His advisor paused for a long moment before answering, and that pause told Robert everything he needed to know. In Nevada, Clara closed her notepad, walked inside her house, and made a phone call to an old friend who had been in the silver mining business for 40 years. They spoke for over an hour. By the end of the conversation, Clara's friend said something that stayed with her long after she hung up the phone. He said that in all his years of watching silver, he had never seen industrial buyers behaving the way they were behaving right now. They were not waiting for dips. They were not trying to time the market. They were buying consistently, quietly, and with a sense of urgency that he had not seen since the late 1970s. In Chicago, Daniel stayed late at the office that evening. After everyone else had gone home, he sat alone in the quiet building and pulled up every major silver price cycle in recorded history on his screen. The 1970s run, the 2011 spike, every significant move that silver had ever made. He studied the conditions that existed before each one, the debt levels, the industrial demand patterns, the accumulation behavior of large players, the gold-to-silver ratio at the time. And as he laid each historical period side by side with the current data he had been analyzing, a picture formed on his screen that was so clear, so structured, and so undeniable that he sat back in his chair and let out a long, slow breath. Every single condition that had preceded the biggest silver moves in history was present right now. Not some of them, not most of them, every single one of them. The only thing missing was the trigger. The one event, announcement, or shift that would cause the rest of the world to suddenly look up from whatever they were distracted by and notice what had already been building beneath the surface for months. Daniel did not know what that trigger would be. Nobody ever knows what the trigger will be until after it happens, but he knew with complete certainty, backed by decades of historical data, that the trigger was coming. And when it came, the move in silver would not be the kind of move that gives people time to react. It would be the kind of move that people either prepared for in advance or watched from the outside with regret. He turned off his screen, packed his bag, and walked to the elevator. As the doors closed, he looked at his reflection in the polished metal surface. He thought about his parents, his younger brother, his friends who laughed whenever he talked about commodities. And he made a quiet promise to himself that before the week was over, he was going to have a very serious conversation with every single person he cared about, not to scare them, not to make predictions, simply to ask them one question. The same question that Robert had asked his financial advisor. The same question that Clara already knew the answer to after a lifetime of living near the ground that silver comes from. How much of what you own is real? Because right now, above $80, holding strong, refusing to fall, silver is asking that question to the entire world. Most people are not hearing it yet. Most people are still distracted, still trusting, still assuming that the system will continue to function exactly as it always has. And maybe they are right. Maybe this time really is different in the opposite direction. Maybe silver falls back to $30, and everyone who was watching closely looks foolish for a while. But Robert could not sleep. Clara underlined her words twice. Daniel reached for his personal phone. And somewhere in the world right now, the people with the most information and the most resources are quietly, steadily, and very deliberately moving towards silver at levels that history says they should be running away from. That is not nothing. That is everything. And the only question that remains, the one question that this entire story has been building toward, is the same question that started it all. Are you early or are you already too late?